For many senior citizens, the golden years are a time of reflection, family, and enjoying the fruits of decades of labor. However, rising inflation rates are casting a shadow over these years, presenting financial challenges that may not have been anticipated. As prices rise, seniors often find that their fixed incomes do not stretch as far as they once did, making every day a financial calculus. You've captured a common concern that many senior citizens face in today's world. The concept of the golden years suggests a time of relaxation and enjoyment after years of hard work, but financial challenges like rising inflation rates can certainly cast a shadow over this phase of life. Rising inflation rates and seniors. Inflation refers to the general increase in prices of goods and services over time. While a moderate level of inflation is a normal part of the economy, it can pose significant challenges for seniors, especially those on fixed incomes. Fixed incomes typically come from sources like retirement pensions, social security benefits, and savings, and these incomes may not increase at the same rate as inflation. Over time, if the income remains unchanged, a retiree's purchasing power dwindles, forcing tough decisions about what essentials to forego. This means that the same amount of money buys fewer goods and services, leading to a potential decline in the quality of life for seniors. Medical costs. Inflation particularly stings when it comes to healthcare, an area where seniors tend to spend a larger share of their income. Prescription medications, medical supplies, and care services are all susceptible to price hikes. The Medicare program does provide some protection against soaring medical costs, but out-of-pocket expenses can still be substantial and are affected by inflation. For seniors on fixed incomes, the impact of inflation on healthcare costs can be especially burdensome. As prices rise, it becomes increasingly challenging for them to afford necessary medications and treatments. Many seniors find themselves having to make difficult choices between purchasing essential prescriptions and meeting other basic needs. Additionally, medical supplies such as hearing aids, mobility devices, and diabetic testing supplies are not always fully covered by Medicare. These out-of-pocket expenses can quickly add up, further straining the budgets of older adults. Housing and energy. With advancing age, many seniors hope to downsize or move into housing better suited for their needs. However, inflation drives up property prices, making such moves more expensive. Additionally, rising energy prices can result in higher utility bills, further squeezing the budgets of those on fixed incomes. For individuals and families who rely on a fixed income, rising energy prices can have a significant impact on their monthly budget. As utility bills increase, the already limited funds become even more stretched, making it increasingly difficult to cover other essential expenses. Households with fixed incomes often have little or no flexibility to absorb unexpected cost increases. Every dollar spent on higher utility bills means less money available for groceries, healthcare, transportation, and other basic needs. Food and transportation. Day-to-day essentials, such as groceries, can also become pricier due to inflation. Similarly, seniors relying on personal or public transportation will feel the pinch as fuel and fare costs rise. As the cost of living continues to increase, seniors may find it increasingly difficult to afford basic necessities. Groceries, for example, can take up a significant portion of their budget. With inflation driving up prices, even everyday items like bread, milk, and vegetables can become more expensive. Transportation is another area where seniors may feel the impact of rising costs. Many older adults rely on personal or public transportation to get around, whether it's running errands or attending medical appointments. Savings and investments. Seniors who have saved and invested wisely hope to live off the returns from their investments. However, inflation can erode the real returns of these investments, especially if they are heavily skewed towards fixed-income securities like bonds. With interest rates historically low in recent years, many seniors have found the yields on their savings accounts or CDS lagging behind inflation. This means that their purchasing power may decrease over time, making it challenging to maintain their desired standard of living. To combat this issue, some seniors may choose to explore other investment options that offer higher potential returns. One option for seniors looking to generate higher returns is the stock market. Investing in stocks can provide an opportunity for capital appreciation and dividend income. However, it's important to note that investing in stocks involves a certain level of risk, and market fluctuations can impact the value of one's investments. The silver lining. While the picture painted by inflation can seem bleak, there are strategies seniors can adopt to mitigate its effects. Strategies to address financial challenges. Budgeting and financial planning. Seniors can benefit from creating a detailed budget that outlines their monthly expenses and income sources. This can help identify areas where cuts can be made and prioritize essential expenses. Diversified income streams. Relying solely on a fixed income can be risky. Exploring additional sources of income, such as part-time work, freelancing, or renting out property, can help supplement the fixed income and provide more financial flexibility. Investing and savings. Seniors should consider having a diversified investment portfolio that includes assets that can potentially outpace inflation. However, the level of risk should be carefully considered based on individual circumstances. Healthcare planning. Exploring healthcare options, such as Medicare and supplemental insurance, can help manage medical expenses more effectively. Long-term care insurance can also provide financial protection in case of extended healthcare needs. Downsizing and housing options. Seniors might consider downsizing to a smaller and more affordable home, which can free up funds for other expenses. Additionally, exploring senior living communities that offer various levels of care might provide both financial and social benefits. Government assistance programs. Some government assistance programs, tax breaks, and discounts are available specifically for seniors. Researching and utilizing these programs can help alleviate financial pressure. Regular financial check-ins. It's important for seniors to regularly review and adjust their financial plans based on changing circumstances. Consulting with a financial advisor can provide personalized guidance. A financial advisor can help seniors navigate through the complex landscape of retirement planning, ensuring that their goals are aligned with their current financial situation. They can assess the unique circumstances of each individual and provide tailored advice on how to optimize their resources. One crucial aspect that a financial advisor can assist with is managing investments. With market fluctuations and changes in personal circumstances, it's essential for seniors to review their investment portfolio regularly. Looking ahead. As policymakers grapple with broader economic challenges, understanding the specific hardships faced by seniors becomes crucial. While inflation affects the entire population, the fixed nature of many retirees' incomes makes them particularly vulnerable. Protecting this demographic, who have contributed so much to society, will require innovative solutions, compassionate policy making, and community support. The golden years should be a time of comfort and security, and ensuring that inflation doesn't tarnish them is a collective responsibility. Inflation, a natural economic phenomenon, has consequences that disproportionately burden senior citizens, many of whom rely on fixed incomes. As costs for healthcare, housing, and basic necessities rise, seniors find themselves making difficult choices on essentials that significantly impact their quality of life. While financial strategies can offer some buffer, there's a pressing need for broader systemic solutions. Policymakers, communities, and financial institutions must work in tandem to ensure that the retired population, who've paved the way for the younger generations, can navigate their twilight years with dignity and financial security. The resilience of a society can often be gauged by how it supports its most vulnerable, and in the face of inflation, that measure becomes ever more critical. While rising inflation rates can indeed present financial challenges for seniors, proactive financial planning, diversified income sources, careful budgeting, and making informed decisions can help mitigate these challenges and ensure that the golden years are as comfortable and enjoyable as possible. It's important for seniors to seek advice, stay informed, and take control of their financial situation to navigate these complexities successfully.